Live. Thanks everyone for joining us. Today we are coming to you live here, September 8th, 7 a.m. And Hari, you're at 6 a.m. Thanks everyone for joining. Today we're going to talk about a couple of different topics. Again, the way that we like to structure this podcast is talk about some relevant topic up front, some relevant news. And then on the second part, we talk about a particular company. And today we're going to talk about Bed Bath & Beyond. All right, so the first topic is kind of relevant news. What we've been hearing a lot is the looming energy crisis. Maybe looming is a bad word because it's already here.
Yeah.
So we should probably talk about that and how that relates to your investments, how that actually impacts you as an investor in the stock market at the moment. And not to mention all the humanitarian crisis that might occur and maybe is occurring already. So let's start there. So, Har, you posted on our Slack channel, or I guess I posted a few days ago about the energy crisis, and you posted subsequently about the currency collapse and things like that. But let's start us off with what's going on. Give us the lay of the land.
Well, so it really started with the COVID pandemic, and um, you know, as most countries went into a recession during the pandemic, they've and then they started opening back up again. They sacrificed a lot of their GDP to do lockdowns to shut down their economy. And so um, so that has some hangover effect that's coming into it. But you know the thing that is kind of killing the economies right now is the ongoing war with Russia and Ukraine has essentially led to a enormous spat between the EU and Russia has essentially cut off gas. Russia is the main supplier of natural gas and other things to the EU. They've cut off their main pipeline called Nord Stream 1. And as a result of that, the EU is now having to scramble to, use other forms of energy to cover their power loss in their grid. But the biggest thing that's occurring is that most homes in the EU are use natural gas to heat their houses. And so people are now having to scramble and fall back to, because prices have gone up by 10x. People are now having to pull in gas and other things at much higher prices, or they're going to either go without, or they're going to go use alternative fuel sources like wood to heat homes and things like that.
Yeah, I'm just flashing a map here. I learned about the Russian gas pipeline and the whole complicated geopolitics behind it. I mean, energy market and energy policy is so interconnected with geopolitics. They're totally inseparable. I first learned about the geopolitics and how it relates to energy in college and how it relates to China and the whole thing. But this map, I think, is illuminating. Just take a look at some of these maps. If you look, I mean, basically, Europe, it's like feeding tube. I mean, look at some of these lines that are going into these countries, and not every country is sort of created equal when it comes to the energy mix. Germany, for example, is more dependent on Russian gas than France, for example. France has a lot of nuclear power plants all around the country. Germany is more dependent. I think Italy also. But I think this image tells you a lot about what's happening in Europe right now. If Russia were to shut off these gas pipelines and oil pipelines, um, it does it does quite a bit of damage, as we were seeing. It sort of cripples the economy. So I just wanted to flash it as a uh, as a
Yeah.
as a way to visualize this.
The other thing that I would say is 45% of the gas is coming from Russia at this point. and 15% of all gas it was coming through Nord Stream 1, which was the one that's actually shut down. So that's just gives you an indication. They are getting gas from other Russian pipelines, but they're much smaller. Um, but other countries are going to have to kind of step in, the U.S. and other things also.
Mm.
We actually got a comment from on the live stream. It's also worth noting that the mainland Europe has one connected energy grid, much like the U.S. Outside of Texas has essentially a connected grid as well. So so yeah, if one country is using gas to create electricity, then they can't, they'll have to draw gas from other places to go generate electricity. So it's a combination of multiple factors at the same time happening would cause both electricity shortages, heating shortages. It's a huge mess. Both as you were saying, economically and a humanitarian crisis that we're going to run into here very shortly.
Mm-hmm. Yeah, and as I understand, some of the other commodities that are used to create fuel, or some of the other commodities that is used to create like heat homes and things like that, coal, wood, those commodities prices are also surging at the moment. So alternative fuel sources also is becoming expensive. So I mean, we'll see. One of the interesting charts that I saw was, let me pull this up, was the storage capacity, the capacity of Germany to store energy and how much of that is filled at the moment. Let me pull this up. Germany. Here we go. Yeah, I find this chart interesting. Can you see this chart?
Yep.
So here we go. Yeah, maybe this is a good one. So this chart shows how much. So it ebbs and flows. So during the summer months, so starting in, let's say, April to July, April, May, June, July period, they start building up storage capacity, or not storage capacity. They start to fill up their storage with excess gas in preparation for the winter. And right now, as I understand, this chart is not accurate. I think we're at about 80% or somewhere around 80%, and then the Nord Stream got shut down. So they say that 80% is enough to get through the winter, but the problem is it doesn't solve the scarcity problem, and therefore the price hikes that we're seeing. So just wanted to show that again as a way to illustrate the point.
Yeah, and let's also not forget that natural gas, as one of our commenters pointed out on the stream. Thanks for the comment, Jim Varney. Natural gas is also just part of the, it's an input for many other chemicals and other things too. So, you're taking away both an energy supply and an industrial good input that is needed for a lot of different, producing chemicals, producing plastics, producing lots of different other things that, is just part of the everyday economy. So, I mean, it's impacting them in multiple different ways, not just energy alone.
Mm-hmm. Let's shift gears here and talk about the energy, the currency collapse, and other currency relative to the U.S. dollar. U.S. dollar has been gaining tremendous strength relative to other currency. Talk us through what that means for us. All right.
So there's a few things I think that are critical to understand why is that shift happening. So as the U.S. interest rate has gone up because we've raised interest rates, people have looked for safety during this, economically, concerning time. So they've shifted foreign currencies into U.S. dollars and bought bonds, so that they can get, the 2.5, 3%, yield that they wouldn't have gotten 6 months ago when the interest rates were much lower. So what that does is it drives a lot of demand for U.S. dollars, and because they're fleeing other currencies, it raises the U.S. dollar strength relative to other countries. So if you're living in the US or you're living in the EU and you're not transferring currencies, it doesn't really matter too much to you. You aren't going to notice that impact directly. What you are going to notice is um, the purchasing power for buying things outside may actually decrease. Or will actually decrease. And this is hitting company balance sheets and earning statements pretty hard, because if you're in the S&P 500, about a third of the companies or a third of the revenue generated is foreign. So what looks like when you actually look at the constant currency basis, you see a decline in revenue, but it's actually due to a weakening of the U.S. Or of other currencies relative to the U.S. dollar. So on a constant currency basis, it's much more difficult to determine, is revenue growing? Is revenue staying the same? Because you're now also having to deal with currency, changes as well. This happened in 2017, 2018 as well. And then the weakened, U.S. dollar weakened against the foreign currency exchange since then, and then it's now started to pick back up. And I think now the British pound is at the lowest rate that it's been since 1985 relative to the U.S. dollar.
Yeah, let me show some charts around this. So take a look at this. This is euro dollar exchange rate. So euro at the top, USD at the bottom. You see that it's sort of, since 2010, it's been, the collapse from here to here, it's pretty steep, sort of similar to, I'm not sure what happened here, but it's interesting. But yeah, this is what we're talking about. Another one is Japanese yen. This is sort of flipped, but it conveys similar concept. It's just shooting through the roof right now. So if your currency all of a sudden in a matter of 2 years, went up by 50%, then your wealth relative to the U.S. dollar has shrunk by 50%. Your purchasing power has shrunk by 50%. So that's like you said, that translates into just like less buying power in the global market. If you want to buy, I don't know, commodities from import oil from other oil producers, that just means that your yen is not going to it's not going to buy you as much. And did you mention, I'm not sure if you mentioned this, but 30% of S&P, let me close this window, about 30% of S&P 500 companies earn in foreign currency. And so what that means is that the 30% that they earn is just in relative terms to the US dollar, it's just going to be less because of the currency collapse that we're seeing.
Yep.
Yeah. And then also, this is an interesting point. If the currency gets too strong, your imports aren't competitive in the market. Right. That was one of the reasons why, like, for example, Germany and some other like Nordic countries benefited tremendously from being part of the Eurozone is because their currency was, because they adopted Euro, they now were treated as part of the bloc, and they can now sell stuff at a lower with a weaker currency, which was Euro versus their own. That means that their product, their goods and services that they sell across the world is now more competitive because they're selling with a weaker currency. And so what happens with the strong dollar is that whatever, I don't know, GM or whoever sells stuff outside of the US, now it's just going to be less competitive because dollar is a stronger currency, and therefore it'll demand higher price. So in the global market, it's just not as competitive.
Yep.
So that's another thing to watch out for. Anything else that you want to touch on with this?
Well, I mean, I think what we're witnessing is, is a setting up the stage for a fairly large recession, right? Global recession, because when you have inflationary pressure, you have like they were talking about in the UK, restaurants, and bars and pubs that have been operating for decades are looking to are either shut down or operate only 2 or 3 days a week because the cost of everything has basically gone up. Like for one, side fact here, like a lot of fish is imported from Russia. Cold water fish is imported from Russia, and so fish and chips, pubs in England can't afford the price of food at this point, on top of energy and all of these other things. So they're going from 7 days a week to operating 2 to 3 days a week because they just don't have customers coming in the door, right? So I think we're in the middle of a recession. I think is pretty obvious, but I think it's going to get worse here over the winter time because you're going to add on top of that an energy crisis, and you're going to add on top of it, um, potentially more pain from Russia and the Ukraine, fight. So
Mhm.
I think this is going to be I think at this point, it's not looking like it's going to resolve itself here in the next 3 to 6 months.
Mhm. I'll just add one more thing, which is that I think this is going to happen. This is sort of the first shots that is fired. UK just about 6 hours ago announced that they're going to open up their treasury to support their population in dealing with this rising cost of fuel. So the policy announcement is expected to freeze the price of energy either at its current level or at £2,500. Yeah. So I think that the whole price. Yeah. Okay. So $180 billion or pounds worth of support, et cetera, et cetera. So I think this is the first of many countries to come. I think this is going to happen. And what does it mean for this inflationary pressure that we are experiencing right now? I think it's just going to add to the fire. So I'm not sure what's going to happen with inflation, and at the same time, we're raising interest rates, and I don't know. It's a convoluted mess.
Yep.
Okay, let's jump to the next topic. Bed Bath and Beyond. It made the headlines because the CFO unfortunately committed suicide. I think the intent is still TBD. Um, can you tell us a little bit about Bed Bath and Beyond, just high level?
Yeah, I mean, so they're a retail store company that operates. The main flagship is the Bed Bath and Beyond, like home goods, but they also own Bye Bye Baby, which is uh, is one of the main infant and baby supplier stores. So between those two companies, and they have some, I think they have a couple of other brands. They're they've been operating for at least the mid '90s, and have been very profitable as a company. And I think their revenue peaked in the last few years at over $12 billion. Yeah, 2018 was their highest year, and was a highly profitable company. But everybody was kind of pretending the doom of retail brick and mortar because of Amazon and because of other things. So they've been trading at a discounted price, um, uh, and had been operating off of this. We've always talked about these older, established businesses that generate a ton of cash flow. Doing a share buyback, doesn't make sense, relative to the price of their stock. But then what kind of hit is in the last 2 years, the pandemic shuts down a lot of these retail stores, and they're getting hit pretty hard with these rising inventory levels, and this is hitting almost everybody in retail. Target, Walmart, all of them have been struggling with rising inventories. And I think, and then they became kind of a meme stock. People were kind of piling in on them because, they're really cheap relative to the, and I think you could argue they are, right? They've been free cash flow positive for every year except this last fiscal year. So I think there's a lot going on here, and but there's also a lot of risk associated with the falling knife. Like, we're going into a recession. This is a company that's struggling, with heavy, excess inventory, and I think their CFO, I think he was just overwhelmed with how much what was going on with the company, as well as I think he was being accused of pumping and dumping the stock as well. And so I don't think he had I think that all of that came together and, caused his suicide.
Mm-hmm. Yeah, I think I'd like to focus on the buyback program. And let me I'm doing a lot of screen share today. Okay, so this is the Bath and Beyond. Okay, what I want to focus on is, so what you're talking about here is the top line revenue from $12 billion of revenue. That was its peak in 2018, and then it started to dwindle. And now in 2022, the top line is 7.8. And then you mentioned free cash flow. So free cash flow here we go. Free cash flow, it's been positive ever since. Ever since, and then just last year, negative 300. And then if you look at the inventory has been piling up. I guess in the good days it didn't really matter too much, but this could be problematic. This could be problematic here. And then their cash reserve is down to about $500 million. What I'd like to point out here is the buyback program. What caught my eyes when I first looked at this company was that they were announcing big buyback programs. Right now, mind you, the cap is around $1 billion. This is a little bit outdated, but it's about $1 billion now. And if you look at how much they spent on buyback, I mean, they've been spending, just this year, $500 million, last year, $380 million, and so on and so on. I mean, in 2015, 2016, they spent $2 billion, $1 billion, another $1 billion in 2014, almost $1 billion in 2013. A lot of buyback programs. And as a result of that, they were able to reduce their share count. So shares outstanding at its peak was around 300, and then it started to dwindle. And now we're at about 100 million shares outstanding. But if you think about that, they were spending about $1 billion, right? They were deploying, nearly $1 billion in stock buyback programs.
Mm-hmm.
Right now, their market cap is $1 billion. Obviously, with the circumstances, with the recent kind of drop in share prices, this has gone down. But I guess my question right now is, was the capital deployed in the most effective way when the buyback programs were happening? I think that's called into question.
Yeah, and certainly in hindsight, it looks bad, right? Like that they were spending money. This was a very similar story with GNC. Was spending a multi-billion dollars on a share buyback program at their peak, their all-time high. And I think Bed Bath & Beyond was in the same kind of category, right? Spending money on their share buyback at an all-time high, when, now they're struggling to even, stay afloat. And they've taken on a bunch of debt that I think their debt load now is up to $3 billion. So it's a, and what do they have to show for it, right? They've shown, not a whole lot really.
Mm-hmm. Yeah. And I'd love to look into this, but this debt go, was it a productive debt? Meaning that was it used to, I don't know, renovate new stores and things like that, or was it used to, I don't know, launch a big buyback program? I'm not sure. We have to look into it.
Yeah, and I guess the question is, when you're at a company like this and you have excess cash, right? We've talked about how AutoZone and NVR and the Southwest Airlines pre-pandemic were doing a great job buying back shares because their PE was so low that it actually made a ton of sense, to do that. Um, could a management have actually seen the writing on the wall and said, hey, we're in cash preservation mode, or should we be paying a dividend instead, of doing the buyback, because that's going to be more accretive to our investors. Right. It's a difficult call to make. But as investors, we don't have to get all of these calls right. Right. What we have to do as investors is look at the opportunity cost and then determine if this is the best place for our capital. Right. And to me, Bed Bath and Beyond was one of those companies where I just couldn't see what was going to happen. I remember thinking about it in 2017, thinking how cheap it was relative to their cash flow and things like that. But had I bought in at that time, I may be holding the bag right now, because the revenue collapsed, and especially during the pandemic, everything kind of fell apart for them, right? So I think that's a big part of your discussion, or your decision making, is in a company like this, are they going to actually maintain their revenue for the last, that they've built up over the last 25 years? Because if they're not, then no amount of capital return to shareholders is really going to matter, because ultimately the business is falling apart from within.
Mhm. Yeah, I guess it's one of those. The way that I thought about approaching this company is more of like a cigar butt kind of strategy than buying good businesses at a fair value. It seemed to me that, I mean, maybe I'm the wrong. Maybe this sort of goes to another point, which is the circle of competence. I don't really know this industry very well. I'm not a shopper at Bed Bath and Beyond. I just so I don't know. The way that I was approaching it is, okay, wow, they're doing a massive buyback program. Maybe there's something there. I didn't pull the trigger on them. There were other companies that were doing bigger buyback programs that had a more sound. It seemed to me that a more sound, more durable business than Bed Bath and Beyond. And it sort of goes back to the very first questions that we ask when we look at companies: is what is their moat, and is it really durable? Because if a lot of buyback programs should be happening when companies are sort of in a mature stage, they throw a lot of cash, just like kind of like this. But you have to. I think this is a good case study of that's obviously number one. You want companies that are doing buyback programs that are more mature businesses that are throwing out excess cash. That's number one. And number two is just fundamentally, it is a mature business, but is like, where, like, can they protect the moat that they have? And if they can't, then I think that's a discussion. But this,
Yeah.
yeah. Sorry, go ahead.
Just one comment I'd add to that is, in the case of those companies that we talked about, AutoZone, Southwest Airlines, NVR, they were still growing their top line revenue. So they still were maintaining their moat, right? Which is why it's such a critical part of the evaluation process. Is even in the cigar butt case, right? You have to either be paying almost nothing for the entire business, or if you think it's an ongoing concern, you have to at least be able to value what the moat will be over the next few years, right? To see if, while your investment thesis plays out. Because if the top line revenue continues to decline, all bets are off in terms of the value that you applied to it, right? But if they're able to maintain their revenue or grow it at at the inflationary rate, then yeah, it's a different story altogether.
Yeah. This is another, I guess, because you mentioned inflation, I think this is another interesting conversation or kind of angle at looking at this. What is the moat for Bath and Beyond when we are going into kind of recessionary cycle and inflationary pressure, inflationary cycle right now? Right? How durable is it? I'm just looking at this revenue top line.
Yep.
They did 7 billion. It's 10 years ago they did 7 billion.
Right.
So like the efforts between 2011 to 2021, these years, last 10 years, I mean, it feels like it's very shaky.
Yeah, one way to normalize that comparison is to also look at revenue per store. Because right now, the challenge that you have with looking at it is you don't know if they've started shutting stores down to maintain profitability, or if they sold off some businesses, because this is as reported on their income statement. But it's still, that's why context matters, why the story matters when you're looking at any of these businesses. So, but yeah, if just all other things being equal, if their revenue has gone almost 40% decline from their peak, and pretty fast too, right? And it took them 20 plus years to get to this point, to get to the peak, and then now it's falling off a cliff, right? It's a big concern.
Yeah. So there you have it, guys. That is our take on Bath and Beyond. Let me shut this down. So that sort of covers it for us for Bath and Beyond. I know a lot of you requested for us to look at NVIDIA. We will do that maybe next time. I'm not sure, but I can promise that we are going to look at it. It's interesting right now, NVIDIA, with the new legislation about the licensing, their top line is getting a $400 million per quarter haircut because they can't export to China now. And it's not just NVIDIA, it's the entire semiconductor market. So that'll be interesting as we look at NVIDIA. So stay tuned for that. Any other thoughts or comments, Ari?
Yeah, I think we're going to have, as we've been getting back to the weekly streams, we've also had a lot of people come back to our Slack channel and have people commenting all the time. So if you're interested in joining us there, you can meet, send us questions, have, suggest other companies you want us to cover during the live stream. You can email us at info@valueinvestor.org and we'll add you to the Slack channel. We'd also really appreciate it if you would like, comment, and subscribe on this, so that we're going to stream every Thursday morning at 6 a.m. Central, 7 Eastern. And so we'd appreciate it if you'd hit the notification bell so that you can join us live and send us comments like Jacob and Jim have been sending us for the last 20 to 30 minutes. One comment that was just brought up was check out Vale, the company Vale from Brazil. So we'll put that on the list to cover maybe possibly next week, because I think that'll be an interesting story along with NVIDIA.
Sounds good. All right. Thanks, everybody. We'll see you guys next week.